Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the US 30, and we can see that the market's fallen out of bed quite strongly. So we've got overlapping wave structures. So what that means is that markets come down over now this one here, and but previously this one here. So that creates a corrective pattern. We would still need a 5-wave sequence to the downside, an impulse wave. So as such, the 1, the 2, the 3, the 4 and the 5, which looks like that's going to occur. Once that occurs, then we'll see we'll get this. We'll just go 1, 2, probably 3, 4, 5, then an A, B and a C bounce off here. Because we got 5 waves in this in different direction, which is down, different direction from going up here, because we were getting the 5-wave structures up through here, but because we're getting overlapping wave structures, then it's looking quite corrective. So once we get this 3-wave price action across here, it may not bounce that high, but the norm is the 61.8 retracement level from the top to the low here. Once that's done, then we'll get another 5 waves like this one through here as such here, and that would be the short area through here that we're looking at. There is, however, one more sort of possibility for the long trades, and this is how it's sort of counted here. That would be wave 3 to here as such, wave 4 to here, and we do have this 5-wave structure up through here, which we could put wave 5 just here, but we just need to wait for this low to, well, if this low gets taken out here, then we're in a bearish picture here. We could also say that if the market finds the 14,500 as the resistance, retested resistance, then that would also give us a bearish bias. However, this little 5-wave sequence up here, we need this to be basically broken, before we can call in a bear market, technically speaking. So if this was 5 waves up through here, then the 61.8 retracement level is kind of where this low is at the moment. But it's always not, it doesn't have to be the 61.8. It can be, 40 to 80, so to speak. So that's why it's always better to work with the closest largest number, and that would be the 14,500. So yeah, technically that low there would need to be taken out for this 5-wave sequence to be cancelled, so to speak. Otherwise, this 5 waves up through here would be wave 1 up here, coming back for wave 2, and then wave 3 going higher through there, and obviously being, supported above the 14.5 there. So, look, yes, it's bearish, and it has given some overlapping wave structures, but it hasn't taken the low of the last 5-wave sequence to the upside out. So, we can't call in a top. It's still, coming back and retesting the support here. This little sequence down here, we can focus on that and count that, which I was doing this morning through here. So just squashing that up there. This is sort of how it looks in this terms of down for 1, back for 2 here, and then 5 waves down. Well, that little 5th wave is in play here now, so that's been done, and there'll be a bounce off that, and that's what we're seeing at the moment. The 3, 4 and 5 I was looking for here. So that would make the wave 3 here as such. So that would be 1, 2, 3. I mean, the other markets would be pretty much the same as this as well. So we'd have 1, 2 and 3. This wave 4 moving back up here would move back up to the 4th wave of 1 lesser degree. So that would be there as such. Yeah, we could bring that down to there. 38.2 retracement level from wave 2 there comes in around the 14,580 there, the wave 4 of 1 lesser degree basically. So those guys are all sort of lining up there, and then once that's completed, then another wave down. So that would give us 5 waves down. If we got this 1, 2, 3, 4, and 5 waves down, then we would get an A, B, C, and then another 5 down. Okay, so that's the importance of that. But I do need to point out that because we were looking at this moving down through here at 61.8 or the 14,500, so to speak, of this move here. So this 1, 2, 3, 4, 5, after a 5-wave sequence, we pull back 61.8% in 3 waves and then move higher. So this move here can also be counted in 3 waves. It's as such as an A and a B and a C in 5 waves. So I know it's a bit complicated, but so where we've got the 1 here, that would be the A wave, the B wave, and the C wave down through here. So if this low stays in place, then we've got a 3-wave price action, which would be a bullish picture, and then we'd be moving further to the upside. So the main number up here, of course, is, as mentioned, just say 14,650 up here. So we need to see the market back above that to be, to see the market pushing, making new highs. However, of course, you can use the closest, largest number, which would be 14,600. So support on 14,600 would give us a start to the upside, and also a bit of positive sort of news there on that front there. So look, this can be an A and a B and a C correction through here, and we're going further up through here. So that is a possibility. So just watch out in case we get this wave 4 here and then wave 5. If we get that wave 5 coming down through here, then you know that we've got an impulse wave to the downside, and that will be followed by an ABC correction, pulling back up 61.8% of, if we take that to the 14.5 there. So another retest of 14.6 here from 5 will be ABC back up to 14.6, and then another 5-wave sequence to the downside. So yeah, of course the S&P 500 is pretty much the same as well. We were looking at this as an ending diagonal triangle, or possibly to the upside. But what we're also considering here using the levels is that while the market was in group 2 here, the 65, 72 and the 80, then it was positive. If it drops out of that, then it's negative. So we need to treat it as negative now. Of course, the 1550 here is a bit of a line in the sand, of course. Closest, largest number. So if that became the resistance through here, it's okay to spike lower. Well, technically, this low here, because this is where we sort of started. I've just got this labelled a little bit differently, but still the ending diagonal triangle finishing in through here. So taking that low out through here would see this market coming back into the 1530 area through here, and it's pretty much the same count to the downside as the Dow Jones that was just pointed out through then, the down for 1, the back for 2 here, and then down for 3 here. Now this is a double top through here, so this could also be counted as this 5-wave sequence up here. So the 5-wave structure could start from here. So we just need to be a little bit mindful that we could get a 61.8 retracement level back up to the 1565 before it fails from there. The first level of supply though is 1560 through here, and that will also become sort of apparent through this little area here where the most volume has turned out. So that's the first resistance, followed by the 1565 up through here. So but look, any counter trend up here, any 3-wave price action can be shorted up through here. Yeah, and it's pretty much the same with the European markets as well. This is the DAX here, and this is the high here. And we can see that we've got a nice 3rd wave coming down through here, little 4th and a 5th here. So this is already developing a 5-wave structure to the downside through here. So there's likely to be, after a counter trend here, which this is corrective here, it's in 3 waves here, because this comes down over this here. So there's further downside to come from Germany, which would also reflect on London. And London has a very strong relationship relationship even more so than the Dow to our market, and that would also be continuing to the downside. The Australian market has developed a little bit further, so now we know where it is a little bit. So from this high point here, around the 51.65 up here, we've got 5 waves down now. So we've got the wave 1 down, the wave 2 here, then we've got wave 3 down to here, which would have 5 waves in it. So as we've been counting before, the 1, the 2, the 3, the 4 and the 5. Now we always kept 2 counts in mind, so we could have counted this as an A and a B and a C through here, but this first bounce back up through here was corrective, so we know that it was in 3 waves, so we know whatever happened through here, it would be corrective. We weren't sure if we were going to get, if that was just the A, B, C there, and then we'll be moving down from that point there, or this would be the A, the B and the C into here as wave 4, or we were also looking at a triangle pattern through here as well. Whichever way it was, it's that damn complicated wave 4 that can always trip us up a little bit, but we reasonably stayed firm in having a corrective pattern through here, and we wouldn't have gone long unless we had a solid support on the 5,000 there as such. So now what we're seeing now is we're seeing this breakdown through here, a new low here, so that would create the wave 4 and the wave 5 to the downside through here. Because we've got this 5 wave structure through here now, this is an impulse wave, that means that it could be viewed in a couple of ways, but the important thing is because this is just the daily chart here, because we've got 5 waves coming down through here, that means that we'll get some, once this 5th wave finishes through here, which will also be in 5 waves as well, then we'll get a 3-wave counter trend, and then we'll get another 5 down. So we'll get 5, 3 and 5. Okay, now this top here, this can also be counted as a wave 3 as well. So this is something that we need to work out with the US markets as well. These are in the same boat. I won't get into that just now, but so that's why I've got this labelled as an A and a B and a C, but it also could be labelled down for 1 and back for 2 and then down for 3. We don't have to worry about that just yet, but we do know that, and you need to understand that the correction across the 5,000 here, because we got 5 waves down, has just pretty much doubled in size. So we're going to have 5 waves, because if we get 5 waves in the opposite direction of the market, that means that we get 5 here, that means we'll get the counter trend and then another 5. So that's what we'll be looking at. How quickly this will drop through here, not too sure. If we look at that with a bit of logic, this is the structure so far coming down from the last high here, and we've got it down in 3 waves here, but we're looking for it to develop into 5 waves. Yes, there will be support at the to the closest largest number through here. So probably come back up and test the resistance at 49.30 and then roll over from that point. This is being dragged down by the metal prices and precious metals and base metals, which still have further to go down, so this will influence this as well. So what we could do is we could count down for 1 and back for 2, and the 3rd wave this is still unfolding in the 3rd wave down through here, so which would be longer than this one here. So the 1, the 2, it's just still unfolding through here, so we've got that little corrective pattern here. We'll get a larger one, but it should just continue to move to the downside. So in viewing this here, this means that it's going to be a little bit tricky to trade in terms of whatever markets in Australia that you're looking at, because once this 5th, we'll have this sharp move down through here, of course. Once this 5 waves is completed down through here, then we'll get this B wave through here, and that's going to be the tricky one. The C wave will be easier to trade. So we need to we can make money coming down. We need to be careful, trade less in the B wave coming back up, but we can increase our bets to the downside once this wave C starts to play out through here as well. So that's what we're looking at here. And if we're fortunate enough, then this may be a wave 3 through here as well, and move down even quicker. But if it's a C wave, normally the A wave moves down the fastest. And then the C wave, if it is a corrective pattern, the C wave is more of an angle, more slowly through here. If it's a wave 3 here, then the wave 3 will be sharper than this first move down through here. Okay, well, that's about it. So you know where we are in the bigger picture, and the smaller picture. So we just need to confirm with the US markets over the next session or so to work out what supports have been broken and what we'll be looking at in the bigger picture there. Alrighty, well, good morning and good luck. Oh no, sorry, I've got to do the commodity. Sorry about that. Okay, just starting with copper here. Yesterday we were looking at this wave 4 coming back up through here. The 38.2 retracement level, I think, was pretty much spot on to the 338 here, $3.38. But yeah, so that's all sort of unfolded right, and we're still looking at this moving further to the downside. Here, I've labelled this here as wave 1 here, wave 2 here, the wave 3 coming down, and there'll be a wave 4 and a wave 5 to come down further. But I could be wrong here as well, and this wave 4 here may be just to here as well. So we've actually got a wave 1 and a wave 2 to here. I don't think that's the case because this one's just a tad higher than that, but we'll just bear that in mind, and as it unfolds down here, there might be an extra wave coming in through here. Not that it will matter that much because this is a wave 3 here, so we'll be looking at a wave 4 establishing itself across the 330, and then we'll see a move further down into the 320 area down here lower, which of course will take BHP and Rio and the materials sector lower, and also be dragging the the ASX down through there as well, because we need to see if the banking sector is going to fold with this market, which might just have a bit of a check here. Just have a look at, well, there's BHP in the US overnight, so that's fallen down. That will bounce off the 65 there. Just going to have a look at the banks while I'm here. Yeah, that's this is UBS, but in Switzerland here, this particular one. So that pattern's corrective here, so that will drop lower. Let's have a look at Morgans. Morgans are fallen out of bed, so that means that where's Citi? Bank of America, yeah, that's fallen out of bed. And also too here as well is that we can see that we've got 5 waves down here now. So we've got the 1, the 2, the 3 here, the 4 here, and the 5th wave through here. So that the banking sector can also be topping out through here as well. So that means we need to flip any charts to the to the short side as such. Alrighty, the gold market. Look, not a lot of change here. Still the same move to the downside as we were looking yesterday. We had the wave 3 here, the wave 4, moving down further into, so that wave 5 could be, I'd have to pull that apart there and check on that, but closely the wave 4 here can pull back up to the wave 4 of 1 lesser degree, but I wouldn't bank on that. But certainly retesting the trend line here is probable. So if that's the case, look to add to short positions through here as well. But there's still more downside to come from here. So. And the same would be with silver as well. Silver's, as mentioned yesterday, will vibrate at the 2700, then group 2 under here, which has found the low here, and the 72 being the most important number within this little area through here. But it also has further to move down as well through here. So the 1, the 2, this 3rd wave actually should be further here. The 4th and then the fifth wave coming down through here. Also, oil's fallen out of bed as well, so it will follow stock. So if stock, if the S&P 500 and the Dow Jones continue to the downside, well, obviously this is going to continue to the downside as well. From here anyway, look for a retest into the 95. If you see it in three waves here, then you know it's going to be coming down, retesting this particular trend line through here, which just comes through the bottom here. I've also just relabeled this as well from here in terms of having a little five-wave structure up here for the A wave, then the A, B, C for the B wave here, and then the five-wave structure up here for the wave C here, and that all fits quite well in through here. So let's just see how that unfolds. What we would need to see here at the moment, this is still an A and a B and a C through here. So like the S&P 500 and the Dow Jones, we've got three waves through here. So it is corrective at this stage. We need to see if it's going to develop into five waves. If that's the case, then we have a top in place for the indices, and also oil follows stock, so that will be there as well. The ADP figures that came out last night didn't reach expectations, so that means the non-farm payroll figures on Friday have a bias of being a bit of a letdown as well. So we could see Friday and Monday follow through on the short side of the market, which would leave a bit of a rally in the US tonight, but a rally on low volume, and also leaving a corrective pattern with the follow through to the downside on the Friday and on the Monday. That's what we're sort of looking for there. Alrighty, let's have a look at FX. Okay, for the FX here, looking at the US dollar here, in quite sort of simple terms, as I mentioned before, if the US dollar is above the 83, then we can short the euro, but the euro at the stage needs to be under the 128 here. That's what we were looking for yesterday. For this to lock onto the 128, and also the US dollar to be above the 83 for that position to be taken, and that's not the case at the moment. We can see that the dollar is still below. We still see this move down here as being in three waves, so it is corrective, so that high should be taken out in due course. However, this little ABC here may just become the A wave here, the B wave here, and a C wave here, so it may just get a little bit bigger. So we still need to see really good support on through here. I'll leave it labelled as this for the time being, until this particular this low here is taken out. We'll only relabel it if that's the case. I've looked at this here, that currently this is down in three waves from here, so that's fine. It will pull down a bit further. Just have a quick squizzy at that. This little move here appears to be corrective, so once that little wave 4, once it finishes, it'll move down through here. But from this high here, this is down for 1, or the A wave, back for 2, or the B wave, and then we've got down for 1, 2, 3, cross for 4, down for 5 into here. So sort of expecting a move down into here, and then a move back up through here. So let's just see how we go with that, but we would need to see support on the 83 before we can look at shorting the euro. The euro to the upside here, we were looking at this, and still are, in this pattern through here as a corrective wave. We had this as the A, the B, and the C. Because this hasn't moved down lower just yet, and it still may, we may have this down for 1, back for 2 here, and then move down for 3 here, which would be in line with the S&P 500, because they're not correlating, got a negative correlation at the moment, but let's just see if they turn positive. But there is some ECB figures coming out this week as well, so we need to get those out of the way, and the non-farm payroll out of the way as well. They're the biggies, so we'll see how it goes from that point there. So, but in the meantime, we'll have to count this as an A and a B and a C for the A wave, then this down as a B wave here, and then up for C wave through to here, where it should fail here based on this particular trend line as such through here. It should struggle through there. In terms of trading, though, different story. If we've got a solid support on the midpoint here, the 128.50, solid support on there, then you can trade up. But there's only going to be trouble up through here as well. So. But anyway, if you've got solid support there, a small position to the upside, but there is high risk facing the old high here, and also you need to take in consideration what the US dollar index is doing as well. The Australian dollar has, as you know, well, we were looking a couple of things here. Yesterday we were talking about this being a corrective pattern within here, and support on the midpoint, the 104.50, would be the trade to the upside. That's occurred now, so we do have this five-wave structure to the upside here. But this here also appears to be moving down with the base metals and so forth. So, and it's moving down in an impulse wave. So we need to look at this as being an A, or at least down in 5 waves, back in 3, and down in another 5 through here. So, look, expect a bounce off the 104.50 here, coming back up, retesting supply into group 2 through here. Because of the sharp move down through here, it's likely to fail. This move up through here is likely to be in 3 waves. So if you can work it out in nice 3 waves, then you can look for a short trade coming through here, but just adding in sequence as such, and looking, a failed retest at 72, look to add under the 65, then look, there will be a bounce back off the 50 again, back up to the 60, and then down under here again. But generally speaking, you want to try and get a short position in here somewhere, a very small one, with the view of adding under the forward 50 through here. So that's it really. So all right. So just sort of recapping a little bit as well, is that the US markets are likely to drift a bit lower, and then Thursday they have some sort of rally that we need to look at, and to see if that's on that rally's on low volume. And if that's the case, then we'll see the Friday and the Monday to the downside, and those non-farm payroll figures should follow the ADP figures as well. So that will be the sort of the headline news that will be sort of driving it. So looking at the wave count, the levels, and the headline news, and sort of bringing those together to get some sort of bias, would see the rally on the Thursday and the Friday and the Monday to the downside. So we do have that bias of trading short. Now we do need to see our banks do that, but looking at those US banks, they've also started to develop 5 waves to the downside. Of course, they will have their little counter trends, and then they'll move down further. But the point being is that our banks are likely to follow that mode. So that would put our finance and our resources in bear mode as well. So we really need to be on the short side of the market. We need to be net short. So, alrighty. Well, good morning and good luck.